Welcome back to the channel. Today we're diving into a huge statement from one of Wall Street's top tech analysts, Dan Ives, global head of tech research at Wedbush Securities. He recently appeared on CNBC, and what he said should definitely be on every investor's radar. According to Dan Ives, investors are still underestimating the AI revolution. Not only that, he says this AI wave is now spreading across the entire tech sector, not just the big hyperscalers like Microsoft and Nvidia. In this video, I'm going to show you a clip from his interview, then give you my full reaction and breakdown of what it means for tech stocks, AI, and your portfolio. And stick around, because right after that, I'm revealing 3 cybersecurity AI stocks that Dan Ives believes could be huge winners in this next phase of growth. If you only watch one video today, make sure it's this one, and watch it all the way through. Hit that like button. Let's aim for 1,000 likes on this one. Subscribe if you haven't already, and drop your thoughts in the comments below. I want to hear what you think. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's get into it. Here's what Dan Ives had to say.
Looking at earnings season, tech and comm services, according to 𝗟𝗟𝗗𝗘, they make up pretty much all the earnings growth this earnings season. Without them, earnings growth would actually be negative. Do you think that tech and comm services can live up to it? What are the potential pitfalls here?
I mean, look, I think we're actually going to see an accelerated growth when it comes to earnings season. The big thing here is you're seeing on the consumer side for, let's say, like a Netflix subscription growth, especially international, is going to be pretty robust. But I think the biggest thing here, Frank, is the AI revolution that's now spreading across software, across cybersecurity, and across the rest. And that's really the hyper growth that we're seeing across tech.
All right, so you're seeing hyper growth. But help us out, Dan. I know you're a bull. I know you're pretty bullish on pretty much every stock in your coverage universe. But are there any stocks you see with the potential to maybe miss the mark? I mean, Tesla would be one that comes to mind. I know you cover the EV space as well. Certainly having issues with deliveries and also just some brand issues. At the same time, we've seen a weaker dollar.
Look, I think if there's going to be weakness, it's going to be from the networking players. I mean, when you look like Cisco and I think maybe some of the legacy players like Dell, I think when it comes to software, and we're talking about with Microsoft and ultimately what we're going to see with the hyperscalers, cloud, of course, led by names like Palantir, and cybersecurity is going to be a huge beneficiary because of these second, third derivatives playing out. And I just continue to view it. It's a golden age for tech. And this earnings season, I think this is the start. We've talked about tech stocks up 10 to 15% second half of the year.
I want to talk about cybersecurity. You have a new note out today. You're really bullish on cybersecurity. But if you look since the start of this quarter, cybersecurity has been lagging, actually. It's actually in the red. We use a couple ETFs that we're going to look at. The CIBR down about 4.5%. Similar story for the BUG. The HACK only down about 2.33%. What's going on with this weakness? You're bullish on it. We've heard a lot of analysts talk about not a golden age like you're saying, but just a big boost in cybersecurity following the Mideast tensions. Why are we seeing the sell-off when it comes to cyber?
I think it's really been a rotation, maybe some of the higher growth in software, some of these other AI plays. So cyber's maybe lagged here. I think the market's got it wrong. I think actually when you look at a subsector, cybersecurity could be the biggest subsector of the year for tech. Because what we're seeing, when you look at CrowdStrike, you look at Zscaler, Palo Alto, Checkpoint, as more moves to the cloud, cybersecurity is going to go hand in hand. So I think this is going to be one of those areas that actually significantly outperforms during earnings season.
We also had the quote-unquote one big beautiful bill pass, supposed to be not a golden age. I'm kind of using some of your words, but just a big boost when it comes to CapEx. Who do you see benefiting from that as we look throughout the rest of the year? What big tech players benefit from this boost in CapEx spending? Or who do you see spending considerably more with the idea of this bonus depreciation?
Yeah, look, I think front and center is the massive AI Palantir. I think Palantir is going to be a huge beneficiary when you look at the bill. I think on big tech, Microsoft, Oracle, I think front and center in terms of ones that are going to benefit. And I think what you're really going to start to see here is more and more within the Beltway, there's going to be huge hyper spending on AI. And that it speaks on sovereigns and everyone else. And that's why even Jensen is significantly trying to get in pole position for what's going to be really a massive spending that's going to happen in the Beltway.
Does this change the investor view on CapEx spending? We've seen a couple quarters ago, investors, they kind of punish companies for spending too much. These recent quarters kind of just mixed reaction to boost in CapEx spending. How do investors view CapEx spending now with these changes to the tax laws?
Yeah, you want to see them aggressively on the offensive. I think right now the worry is, as a company, you don't want to see them spending too little, because then they're on the outside looking in. This is an AI arms race, a Game of Thrones that's going on when it comes to AI. And you look at some of these changes when it comes to CapEx, you're going to see more acceleration. And I still think investors are underestimating what this CapEx cycle is going to look like, not even the rest of this year, but into next year. And that's why we believe this is a tech bull market that goes on for the next 2 to 3 years.
All right, give us your top pick, whether it's the Messi of AI, the Saquon Barkley of AI. What's the top pick in the tech space? And also, is there a different stock that's maybe a bellwether of how tech earnings are going?
Yeah, and I'll give you an under the radar one, or at least relative. Look, I still think Microsoft, that can, whether it's the Saquon, okay, like in terms of, to me, that's the one where, when it comes to hyperscalers, I think they join the $4 trillion club along with NVIDIA, relative to that. But I also think you look at IBM, that's the name.
Really?
Rodney Dangerfield software still doesn't get a lot of respect. But when you look at it, when it comes to AI, I think what Arvind's doing there's a renaissance that's going on in Armonk. That's why we're very bullish on IBM.
IBM, that's so. Will we see this read on AI spending through the consulting business? Is it part of the Red Hat business? What's the indicator that the tech trade, as you say often, it's at 9 o'clock, going to 3 a.m. or 4 a.m. I can't remember which one.
10 p.m.
10 p.m. Okay, my bad. What should we be looking for in the IBM earnings that give us that signal that you're saying it's kind of an under the radar play? What should we be looking for?
It's cloud computing, and I think it's AI-driven revenue. And look, services you could say is under pressure, but the stack, that's what IBM's selling into a massive install base. And I think more and more that's a stock that's going to get re-rated. And I think it's investors continue to underestimate what's happened there at IBM.
Dan kicks things off by stating something pretty bold, that tech and services are practically carrying the entire earnings season. Without them, he says, the overall earnings growth would be negative. That's a massive statement. And what's driving it? Two main things. One, robust international consumer growth for companies like Netflix. And two, the AI revolution. And this is key, because Ives isn't just talking about AI in isolation. He's talking about how AI is bleeding into software, cybersecurity, cloud computing, the whole tech stack. He's essentially saying that we're seeing the early stages of exponential hyper-growth across these sectors, because AI is no longer just a buzzword. It's being integrated into actual, revenue-generating business models. That sets the tone for the rest of the interview. Even though Dan is famously bullish, seriously, the guy has rarely met a tech stock he didn't like. He does point out a few potential weak spots. If there's going to be softness this earnings season, he says it won't come from the software giants like Microsoft or the AI hyperscalers. Instead, it'll be from networking and legacy tech players, names like Cisco and Dell. Why? Because they're not moving fast enough to ride the AI wave. These are older infrastructure players that might lag as the next-gen tech ecosystem reshapes. So while the broader tech market might soar, Ives is warning investors to be selective. Not all tech is created equal. Some names will run, others might stall. Then we get into one of my favorite parts of the interview, cybersecurity. Dan calls it possibly the biggest subsector of the year within tech. That's a huge claim, especially since most cybersecurity ETFs like CyBR, Hack, and Bug have actually been in the red this quarter. But according to Ives, this lag is just a temporary rotation, investors pulling money into other growth segments. He sees it as a mispricing. With AI adoption soaring and more businesses moving to the cloud, he argues that cybersecurity will become non-negotiable. He name-drops some big winners here: CrowdStrike, Zscaler, Palo Alto Networks, Checkpoint. These are the companies that are going to benefit from what he calls second and third derivatives of AI expansion. In other words, cybersecurity isn't just riding the AI wave, it's becoming a critical pillar of it. Next, they shift the conversation to a big beautiful bill recently passed, likely referencing new legislation that boosts CapEx through bonus depreciation or tax incentives. Dan is fired up about this. He sees it as a tailwind for tech giants like Palantir, Microsoft, Oracle, and possibly NVIDIA. What's really interesting is his take on how government spending is going to accelerate, especially in DC, what he refers to as within the Beltway. He says we're entering a full-blown AI arms race. Government contracts, defense, national security, all these sectors are starting to pour billions into AI infrastructure. This is where Palantir especially shines, and he mentions how Jensen Huang, NVIDIA CEO, is working hard to position the company as the go-to provider in this new CapEx boom. So in essence, he's telling investors, don't just look at private sector AI demand, government demand is about to become a monster growth engine. Now this is crucial. Just a few quarters ago, Wall Street punished companies for big spending. They were worried about margin compression and return on investment, but that sentiment is shifting. According to Dan, today's investor wants to see CapEx, especially in AI. In fact, he says if a company isn't spending aggressively right now, they risk falling behind in what he calls a Game of Thrones battle for AI dominance. He believes most investors are still underestimating how big this CapEx cycle will be, not just for the rest of this year, but well into 2026. That's a really bullish signal. He's basically saying, if you're playing the long game, you want to be overweight in names that are heavily investing in AI infrastructure right now. At the end of the interview, Dan gives us his top picks. No surprises here, Microsoft leads the list. He compares them to a top athlete, saying they'll join the $4 trillion club, right alongside NVIDIA. That's a strong vote of confidence in Microsoft's AI strategy and Azure's growth trajectory. But what's surprising is his second pick, IBM. He calls IBM the Rodney Dangerfield of software, as in, it gets no respect. But he sees a renaissance happening under CEO Arvind Krishna, especially with IBM's AI and cloud initiatives. He says IBM is selling into a massive installed base, and investors should be watching its AI-driven cloud revenue in the earnings report. And finally, he circles back to Palantir, another name he believes will benefit from both private and government AI spending, especially with the CapEx tailwinds. So, what's the takeaway here? Dan Ives is making a clear case that we are at the beginning of a multi-year tech bull market, fueled by AI, cybersecurity, government spending, and a shift in how Wall Street values capital expenditures. But he's also warning investors to stay selective. This is no longer a rising tide that lifts all boats. You have to know which boats are equipped for the AI storm ahead. Microsoft, Palantir, and IBM, these are his heavy hitters. Cybersecurity is his sleeping giant. And networking dinosaurs like Cisco, well, he's not counting on them to keep up. So if you're investing in tech, or even just watching the sector closely, this interview offers a very clear signal. AI is no longer hype, it's here. And the money is already moving. If you found this breakdown helpful, make sure to like the video, subscribe, and hit that bell so you don't miss our next deep dive into the markets. Let me know in the comments. Do you agree with Dan Ives, or do you think the market's getting a little ahead of itself? Now let's dive into our first cybersecurity AI powerhouse. International Business Machines, ticker symbol IBM. A name synonymous with innovation and technological prowess, IBM has been a driving force in the IT industry for over a century. While many may associate IBM with its legacy hardware business, the company has undergone a significant transformation in recent years, emerging as a leader in cloud computing, artificial intelligence, and of course cybersecurity. IBM might seem like an old-school tech company, but they're reinventing themselves as a cybersecurity leader. Recognizing the growing importance of cybersecurity in today's digital landscape, IBM has made significant investments in its security business, developing a comprehensive suite of AI-powered solutions that are helping organizations protect themselves from the ever-evolving threat landscape. They hold an incredible 81% market share in mainframes, a testament to their enduring presence in the enterprise computing space. Mainframes, while often overlooked in the age of cloud computing, remain a critical component of many large organizations' IT infrastructure, processing vast amounts of data and supporting mission-critical applications, which are the backbone of Fortune 500 companies' operations. These powerful machines are responsible for handling everything from financial transactions to supply chain management, making them a prime target for cyber attacks. IBM's dominance in the mainframe market gives it a unique advantage in the cybersecurity space, allowing it to provide comprehensive security solutions that protect these critical systems from threats. Their AI-powered security solutions help businesses prepare for and respond to cyber threats, creating an impressive moat in enterprise security. By leveraging the power of artificial intelligence, IBM's security solutions can detect and respond to cyber threats in real time, preventing breaches and minimizing the impact of attacks. This proactive approach to security is essential in today's rapidly evolving threat landscape, where traditional security measures are often insufficient. With a market cap of over $261 billion, IBM has been drawing renewed interest from analysts and investors alike. The company reported an EPS of $5.92, and a trailing PE ratio of 47.63, with 2024 revenue clocking in at $62.75 billion. Net income came in at just over $6 billion, showing solid profitability. The company pays out dividend yield of 2.37%, A key factor fueling investors' optimism is IBM's software division, especially its expansion into AI and cloud services. Products like outsmart are at the center of this growth, helping drive digital transformation for enterprise clients. Analysts remain confident in IBM's ability to grow margins and deliver strong performance, even if expectations are a bit mixed heading into Q2. Another major development boosting sentiment is IBM's strategic partnership with Moderna. The collaboration focuses on leveraging quantum computing to advance drug development, which speaks volumes about IBM's forward-thinking approach to merging cutting-edge technology with real-world impact in healthcare. Overall, the sentiment surrounding IBM is largely positive. There's genuine momentum here supported by strong year-to-date stock gains, growing software revenues, and a clear vision for innovation. All eyes are now on the upcoming earnings report, as investors watch to see whether IBM can continue this upward trajectory and solidify its place as a serious contender in the new wave of tech. If you're looking for a stable, dividend-paying cybersecurity play with serious AI credentials, IBM deserves a spot in your portfolio. With its strong market position, commitment to innovation, and attractive dividend yield, IBM offers investors a compelling opportunity to participate in the growth of the cybersecurity market while also generating a steady stream of income. Next up is Microsoft, ticker symbol MSFT, a global technology giant with a presence in virtually every aspect of modern computing. Microsoft has become an indispensable part of our digital lives. From its ubiquitous Windows operating system to its popular Office productivity suite, Microsoft's products and services are used by billions of people around the world. While not a pure cybersecurity company, Microsoft's security business generated over $20 billion in revenue last year, a staggering figure that underscores the company's commitment to protecting its vast ecosystem of users and devices. This revenue is generated from a wide range of security products and services, including endpoint protection, identity management, and cloud security. That's more than many dedicated security firms combined. This impressive performance highlights Microsoft's unique position in the cybersecurity market, leveraging its vast resources and deep integration across its product portfolio to provide comprehensive security solutions that are unmatched by its competitors. Their Zero Trust framework continuously verifies user requests, with AI integration across Azure Cloud and Microsoft 365. This approach to security assumes that no user or device should be trusted by default, requiring continuous verification and authentication to access resources. By integrating AI into its Zero Trust framework, Microsoft can automate threat detection and response, providing a more proactive and effective security posture. What makes Microsoft special is how deeply security is embedded in their ecosystem. From Windows, the world's most popular operating system, which has been hardened over the years to withstand a wide range of cyber attacks. Microsoft has invested heavily in improving the security of Windows, incorporating features such as built-in antivirus protection, exploit mitigation, and secure boot to Azure, its cloud computing platform, which provides a secure and scalable environment for businesses to run their applications and store their data. Azure offers a wide range of security services, including threat detection, vulnerability management, and data encryption, helping organizations protect their cloud workloads from cyber threats. Even its gaming platform benefits from Microsoft's security expertise, with measures in place to protect players from fraud, malware, and other online threats. This comprehensive approach to security ensures that Microsoft's users are protected across all of its products and services. This creates a sticky solution that businesses rely on, positioning Microsoft as a cybersecurity giant hiding in plain sight. Because Microsoft's products and services are so deeply integrated into the fabric of modern business, organizations are often heavily reliant on them, making it difficult to switch to alternative solutions. This creates a sticky ecosystem that benefits Microsoft, allowing it to continue to grow its security business and solidify its position as a leader in the market. With a staggering market cap of $3.76 trillion, P/E ratio of 38.90 with EPS at $12.99, and 2024 revenue totaling $245.12 billion, Microsoft is in a league of its own. Net income stands at a massive $88.14 billion, further reinforcing its position as one of the most profitable companies in the world. Heading into its fiscal Q4 earnings, analysts are feeling very optimistic. Bank of America recently raised their price target from $515 to $585, citing strong momentum in Azure and Copilot, two areas where Microsoft is clearly leading the charge. Meanwhile, The company's aggressive talent acquisition from Google DeepMind is strengthening its AI capabilities and positioning Copilot as a dominant force in the productivity and software space. Citigroup is also maintaining a buy rating on MSFT, reinforcing widespread confidence in Microsoft's growth trajectory. But it's not all smooth sailing. Microsoft is currently facing some serious scrutiny over a SharePoint security breach. Multiple Chinese hacking groups have reportedly exploited vulnerabilities in the software, triggering widespread concerns over potential data theft across countless organizations globally. To make matters worse, a recent patch meant to fix the issue failed to address the underlying problems, raising doubts about Microsoft's effectiveness in managing its cybersecurity defenses. Despite these concerns, Microsoft's overall outlook remains strong. The company has a deep bench of innovation, a solid growth roadmap, and major analyst support. But the upcoming earnings report on July 30th will be pivotal. Microsoft must show that it can balance rapid AI growth with rock-solid cybersecurity if it wants to maintain investor confidence in the long run. Our final pick is CrowdStrike, ticker symbol CRWD. A relative newcomer to the cybersecurity scene, CrowdStrike has quickly established itself as a leader in endpoint protection, disrupting the traditional antivirus market with its innovative Falcon platform. This pure-play cybersecurity firm is revolutionizing endpoint protection with their Falcon platform. Unlike traditional antivirus solutions that rely on signature-based detection, Falcon uses a cloud-native architecture and advanced AI algorithms to detect and prevent cyber threats in real time. What sets them apart is their modular approach, offering 30 different security modules that clients can mix and match. This allows organizations to customize their security posture to meet their specific needs and address the unique threats they face. Nearly half their customers use more than 6 modules, with 22% using 8 or more. This high adoption rate demonstrates the value that customers are finding in CrowdStrike's modular approach, allowing them to build a comprehensive security solution that addresses all of their critical needs. With their total addressable market expected to grow from $116 billion to $250 billion by 2029, driven by the increasing sophistication of cyber threats and the growing demand for endpoint protection solutions. As the market expands, CrowdStrike is well positioned to capitalize on this growth and continue to gain market share. The company currently holds a market cap of $117.07 billion and brought in $3.95 billion in revenue for 2024. Although it posted a net loss of about $19 million, that hasn't dampened investor enthusiasm. One of the recent highlights is the surge in valuation for Vanta, a compliance startup backed by CrowdStrike, which hit a $4 billion valuation in its latest funding round. This speaks to CrowdStrike's smart strategic investments and how it's broadening its influence within the cybersecurity ecosystem. CrowdStrike has also been racking up accolades. It was named the Innovation and Growth Leader in the 2025 Frost Radar trademark for managed detection and response for the second year in a row. And it didn't stop there. For the 6th consecutive time, CrowdStrike earned the title of leader in the Gartner-registered trademark Magic Quadrant trademark for endpoint protection platforms. That's a big endorsement of the Falcon-registered trademark platform's AI-native capabilities. From a market standpoint, the stock recently closed at $475.96, a 1.3% uptick that suggests solid momentum even amidst broader volatility. Analysts remain bullish, pointing to strong long-term demand for cybersecurity services as a major tailwind. That said, there are still concerns around valuation and potential margin pressures. The company's high-growth model means short-term profitability might fluctuate, and some investors are keeping a close eye on how that plays out in future earnings reports. Still, there's no denying that CrowdStrike is at the forefront of cybersecurity innovation. It continues to prove itself as a leader in the space, making it one of the top names to watch as digital threats increase and organizations double down on securing their infrastructure. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just launched my Value Stocks Investing Master Course designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. These principles have stood the test of time, guiding investors to make sound decisions and achieve long-term success. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments, no matter what the market throws at you. The course will provide you with practical tools and techniques that you can use to analyze companies, assess their intrinsic value, and make informed investment decisions. Whether you're just starting out or want to sharpen your strategy, This course gives you the tools and confidence to grow real, long-term wealth. Investing can be daunting, but with the right knowledge and skills, you can overcome your fears and build a portfolio that will generate lasting returns. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. The course is designed to be easy to follow, even if you have no prior investing experience. You'll learn at your own pace, with clear explanations and real-world examples to guide you along the way. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides? Join the Stocks Galore Patreon today and take your investing game to the next level. Our Patreon community is a great place to connect with other investors, share ideas, and learn from each other. Our members there get full in-depth analysis on most of these stocks I mention here. We provide detailed reports on the companies we cover, including their financial performance, growth prospects, and competitive landscape. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Which of these 3 cybersecurity stocks do you think has the most potential over the next 5 years? This is a question that many investors are asking themselves as they try to identify the best opportunities in the rapidly growing cybersecurity market. Is it IBM's enterprise dominance with its strong market position and long history of innovation? IBM has a proven track record of providing reliable and secure solutions to its enterprise customers, making it a trusted partner for organizations of all sizes. Microsoft's ecosystem advantage with its deep integration across its product portfolio and vast customer base. Microsoft's security solutions are seamlessly integrated with its other products and services, providing a comprehensive and user-friendly experience for its customers. Or CrowdStrike's pure-play growth. Let me know in the comments below. CrowdStrike's focus on endpoint protection and its innovative Falcon platform have allowed it to gain significant market share in recent years, making it a compelling investment opportunity. Don't forget to share your thoughts in the comments, and subscribe to the YouTube channel. Thanks for watching, and I'll see you in the next one. We appreciate your support and look forward to bringing you more valuable content in the future.